Good day, traders. Sure you're having a great time. I'm contemplating buying Euro Australian dollar. I'm contemplating buying Euro Australian dollar, and here are my reasons for the bullish buyers. Okay, here are my reasons for the bullish buyers. Now, I'm going to start the analysis using the daily time frame. Now, the first thing I want to do is to apply my Fibonacci tool. Okay. Now, I'm going to apply my Fibonacci tool from this swing low to this swing high. So we can see here that price is currently at a discount area. Price is currently at a discount area. And also at this discount area, we have this fair value gap, which price just filled. Okay, it has filled this fair value gap on a daily time frame, and we can see there's a strong rejection, okay, from that zone. You can see that price just filled this fair value gap, and to some this could be a breakout from a resistance. A breakout from a resistance, price is expected to retest that resistance, which has become a support, right? And this is on a daily time frame. Now if we go down to 4 hour, let's see what's happening on the 4 hour time frame. So you can see what is happening on the 4 hour time frame. Though on the 4 hour time frame, we still have this fair value gap that has not been filled. And the reason price might not come to fill this fair value gap could be this resistance zone support, which some will call a mitigation block. This resistance zone support, you can see. So that could be the reason price will not come to fill this 4 hour fair value gap. Okay. Now I need to wait for a confirmation to buy. Now on the 4 hour time frame, going with my own strategy, I need to wait for this current 4 hour candle to close before executing a buy. I need to wait for this current 4 hour candle to close. I need to be sure there are buyers in the market. So I have to wait for this candle to close bullish. So ascertain that there are a lot of buyers in the market. There are a lot of demands in the market. Okay. Now let's go down to 1 hour. Most likely on 1 hour. Okay, so you can see what we have on 1 hour here. Though we don't have a bullish reversal pattern on 1 hour time frame, confirming we have lots of buyers in the market, confirming that the demand is increasing. We don't have a bullish reversal pattern here on. So in this case, I always like to see price breakout from the last. I like to see price breakout from the last high. Okay, the last high of the bearish candlestick, the high of the last bearish candlestick before this retracement. Okay, so I'd love to see 1 hour candle close above this high before taking a buy on. Now if we go down to 15 minutes, I'm sure on 15 minutes we'll be able to identify a resistance level on 15 minutes time frame. We would be able to identify a bullish reversal pattern on 15 minutes time frame. But I always want to ensure that all the time frames are in agreement. The 4 hour, the 1 hour, 15 minutes. Okay. I always want to ensure that they are in agreement. 4 hours should be set. 1 hour should be set. Also 15 minutes should be set. So let's go down to 15 minutes. I believe 15 minutes is set for the buy. As you can see here, we have the engulfing pattern. So 15 minutes is set. 1 hour is not set. 4 hours is not set. So it's the reason I can't take the trade right now. Okay, because my decision is based on the higher time frame. The higher time frame is to confirm the direction before I go down to lower time frame to identify the entries. Okay, so you can see here on 15 minutes, a lot of resistance has been created here on 15 minutes. We have this resistance, we have this resistance, we have this resistance. And like I said, going by the 1 hour time frame, I want to see price breakout from this high. So if 1 hour closes above this high, the 4 hour is in agreement, has confirmed the trend. Okay, 1 hour also has confirmed the trend, and also 15 minutes has confirmed the trend. that is when I'm going to take the risk on this trade. That is when I'm going to execute the trade. Okay. Now on this trade, I want to risk $40. I need to talk about risk and money management. I need to talk about risk and money management. Now on this trade, let's say I want to risk $50 on this trade. Now on this 15 minutes time frame, you can see a fair value gap has been created on a 15 minutes time frame. And most times price will not move until it fills that fair value gap. Most times price might not move. So there is a possibility for price to pull back to fill this fair value gap it created. There's a possibility. You can see at this point there was an attempt. You can see there was an attempt to fill this gap, but that gap was not filled. So there is still possibility for price to pull back to fill this fair value gap before going bullish. Okay. So like I said, I'm going to take a trade once price breaks out from this zone. Once price breaks out from this high, I'm going to take a trade. Now on this first trade, since I know there's a possibility for price to pull back to this zone, on this first trade, I'm not going to risk more than 70% of my daily drawdown. 70% of my daily drawdown. So if I'm willing to risk $50 on this trade, if I'm willing to risk $50 on this trade, okay, if I'm willing to risk $50 on this trade, so on the first trade I would execute, if I'm risking $50, okay, if this is what I'm willing to lose for the day, or I'm willing to lose on this pair, so on $50 now, I need to calculate the risk. What is my risk on this trade? What is my risk on this trade? That's the market risk, which is in pips. I need to calculate that. So if I take this trade, let's assume I execute at 1.7704. Let's assume that's my entry price, 1.7704. Let's assume that's my entry price. Okay. Then my stop loss, I'm going to set my stop loss using the low of this candle. I'm going to set my stop loss using the low of this candle, and the low of this candle, you can see the low price is 1.7651. 1.7651. 1.7651. That will be my stop loss. Okay, now the market risk here is the difference. The market risk here is the difference between my entry price and my stop loss price. It's the difference between my entry price and my stop loss price. So let's subtract 1.7704 from 1.7651. That will be 47 pips. Yep, that should be 47 pips. So that is the risk on this trade, and I'm willing to risk $50 on this trade. So like I said, on the first trade, I'm going to risk 70% of this. So 70% of $50, which is my daily drawdown, 70% of 50, I think that should be $35. So that will be the risk I will take on this first trade. So since this is my capital risk and this is the market risk, so to get the lot size, all I need to do is to get my lot size, I'm going to divide $35, okay, $35 by 47 pips. So let me use my calculator. 35 you need to calculate, you need to know the risk involved before you execute the trade. Okay, you need to know the risk involved. 35 know how much you're going to lose before you execute the trade. Okay, so that will be 0.74. Okay, 0.74 cents. That should be 74 cents per pip. 74 cents per pip. So to get the lot size, I need to multiply this value by 0.1. 0.1 is a constant. Okay, whatever value I get after dividing the market risk by the capital risk, I multiply it by 0.1, and that gives me the lot size for the trade. So this will give us 0.074. 0.074, and on the platform we don't have 0.074, so the lot size will be 0.07. So that will be the lot size I would apply on the first trade. Okay, that will be the lot size. And if price pulls back to this zone, okay, if price pulls back to this zone, let's assume price pulls back to this zone and my entry price at this point will be 1.7. Let's just assume 1.767. 1.767. Let's assume my entry point 1.16. 1. Okay, 1.767. 1.7667, 1.7667. So if this is my entry, my stop loss remains the same. My stop loss is 1.7651 minus, that's my entry price, minus 1.7651. So this will give us 67 minus 51. That should be 16. Yeah, 16 pips. So on the second trade, the market risk will be 16 pips, and I have just $15 left to risk on this trade, right? $15. The first trade I've risked $35, so I'm left with $15. So I'm going to divide $15 by 16. $15 by 16. $15 divide 16. Okay, so that will be 0.93. Okay, 0.93 multiply 0.1. That will be 0.093. Approximately, we don't have 0.093 as lot size on the platform, so I'll be working with 0.09 lot size. I hope that is clear. So that is my plan for Euro Aussie. That is my plan for Euro Aussie. So I'm waiting for the right time and the right setup to execute this trade. What do you think? What do you think? If you have a contrary view, what's your opinion on Euro Aussie? What's your opinion on Euro Aussie? Please kindly drop it in the comment section. Kindly drop it in the comment section. I'm dropping this video on the 6th of October. 6th of October. So please drop your comments drop your comments or your view in the comment section. I'll really appreciate that. I hope you got value from this video. If you did, please do subscribe to the channel. Click on the like button. Subscribe to the channel so that anytime I drop videos like this, you get notified by YouTube. You get notified by YouTube. Thanks for watching. I look forward to having you in the next video. Bye for now.